So for this class, we're going to be speaking about Asia range. We're going to be speaking about Asian high and lows. We're going to be speaking about essentially how liquidity is captured, right, in both directions. So essentially, who can tell me where and when Asia range starts, or like where when Asia session starts?
8 till like 1 o'clock.
8 to 1 o'clock. 8 to 1 o'clock. Not exactly. No. When does Asia session start? 4 p.m. Mountain. 4 p.m. Mountain time. Yeah, 4 p.m. Mountain time. So I think that's what, 6 p.m. Eastern? Yeah, 6 p.m. Eastern. So essentially, there's a gap, right? And if you guys don't know your sessions, I suggest going back over the boot camps. Those go over the sessions in depth. You guys know that Asia goes from, so there's 4 p.m., right, Eastern. Then there's 5 p.m. Eastern. And from 5 p.m. to 6 p.m., there's something known as broker hour. Who can tell me what broker hour does? Who can tell me what broker hour is? One of y'all has to be able to tell me what broker hour is. Okay. Dead space between the markets. Perfect. Yep. That's exactly what it is. So this here, right, this transition, this is the transition between the close of New York session banks, of New York banks, and the open of Sydney banks. Now we're trading in Sydney at 6, right? We're trading in Sydney at 6. So what pairs are going to be moving a lot in Sydney?
AUD.
AUD.
NZD.
NZD. Oh, whoops, not ND, NZD. Now, what two sessions make up Asia? So it's Sydney and another session.
Tokyo.
Tokyo. So it's Asia. So it's Asia is comprised of Sydney and Tokyo. Right? These make up Asia. Now, when does this start? This starts around 6 p.m. Eastern. And when does it end? When does it end?
Right about 1:30ish.
Nope. When does London start?
2.
What time? What session are you? What time zone are you?
Yeah, Eastern Standard Time.
Eastern, so that's 3.
3, yeah, 3, sorry, yeah. Daylight, yes.
3 a.m., right? So 3 a.m. Make sure you guys mute yourselves because there's a lot of background noise. Thank you. So it goes from 6 p.m. to 3 a.m., right? That is quite a bit of a span. So from 6 p.m. to 3 a.m., that's quite a bit of stretch, right? That's a bit of a stretch. So what can we assume from this? There's going to be a lot of consolidation because Sydney and Tokyo, also known as Asia, what are they characterized by? Who can tell me what they're characterized by? They have low what?
Volume.
They have low volume. If they have low volume, what do we expect these what do we expect these pairs to be moving? Do we expect them to be moving a lot or not much?
Not much. Low volatility.
Low volatility, right? Low volatility. And if it's low volatility, let me go ahead and cast this on my phone so I can actually draw well. Right now my drawings are atrocious. Give me one moment. Cool. So when it comes to, all right. So what two sessions are high volume? So high volume. And which two sessions are low volume? So which two are high?
London to New York.
London, New York. Who can tell me why?
Because those are the biggest banks, America and London.
So America and London, not precisely. It's not about like that they're the biggest banks. It's essentially what it's about is what pairs are the most influential. So what pairs are within New York? What pairs move in New York?
USD, CAD,
What commodities move in New York?
gold, and oil.
Gold, oil, the commodity market's at full swing, right? Commodity market is at complete full swing, so we can assume that, right? So US 30 is moving there as well, right? Right. So all of these are moving there, right? All of these are very, very high impact, high volatility pairs. Why? Because they're very high valued, right? And they're also very, very important to the world around us. Now, what moves during London?
GBP, European.
What else? What else moves during London? The DAX German 30. That moves between sessions, really. That moves with US 30. So I'll put that. Yeah, sure, I'll put that, but put a little caveat behind it. What else? Y'all should know this.
CHF.
CHF. CHF. And then what else? Well, this is something that a lot of people trade, but many people get screwed over because of these, because of their high pip count, high volatility. What are these? Okay, nobody knows. Exotics. So like the ZAR, right? The ZAR, exotics. A lot of exotics move during London. Right. And a lot of times gold also moves. Gold also makes a couple moves during these hours. So because of these, right? Because of these, there's going to be a lot of volume because there's a lot of pairs moving during that moment. Now, what will move during Sydney in Japan? AUD, NZD, right? JPY. And then that will be the crossover into London volatility or London volume. That's why you see sometimes, right? That's why sometimes what you end up seeing is you end up seeing volume spike at the end of Asia. Why is that? Well, for the very simple reason that banks in London are now opening their positions. So now obviously the volatility is going to increase. So when it comes to these things, now that you know these things, what are we going to be able to do? Well, we're going to have certain kill zones, right? And we're going to have certain time zones that we're actually gonna look for. And there are these times of the week, right? And there are also times of the day. So firstly, if we talk about times of the week, we have to start up with the topic of power of three, which for a lot of people is a bit of a review, and for others it may be a completely new thing. What the hell? Jesus, my pen is dying. And in a very short explanation, what is power of three? Well, power of three consists of three different steps, right? And essentially what they are is, the first is accumulation of positions. Probably spelled that wrong, but whatever. Accumulation of positions, followed by manipulation of price, and the last one is known as distribution of profit. Now, this should not be confused with accumulation schematics and distribution schematics. So this is not the same as, blah, 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 distribution, LPSY, whatever, right? That is not the same thing at all. Okay, these are two completely different things. They serve similar purposes, but essentially this is the why, right? So how can we know these, like how can we distinguish these things? Well, very simply, the accumulation of positions happens somewhat like this. So let's say that banks are at point A right now, right? They're at point A right now. Let me change the color on that actually. So they're at point A right now, right? They're at point A. And let's say their target is point B down here. Since their target is point B, what are they going to have to do? Are they going to have to buy or are they going to have to sell? Okay, I see some people saying buy first. Buy first. Both. Okay. If you say both, explain why both. If you said both, explain why both. Law number 4, so buying and selling at the same time, right? If people haven't watched Bootcamp 1, it's for every buyer there must be a seller. Okay. Buy first to take out liquidity, then sell into B. Okay. Well, let me propose this to you, and I'm going to start this on a new page so you guys can actually get a clean view of this. So again, let's go back to our points. Point A is going to be over here. Point A is going to be right over here. Then point B is going to be all the way over here. So let's say we're Bank of America, right? Just for shits and giggles. Let's say we're Bank of America. Let's say we're rich, right? And you know what? We're not even Bank of America. We're richer than that. We're the we're Empire Bank, right? And we want to move our money from here all the way down to here. Now, if you guys remember, between price, there will always be an array. There will always be an array. Now, what does this mean? Let's actually draw price, right? And let's actually, no, I can't do that. Never mind. So let's say we draw price and we say, all right, well, at the current moment, as a buyer or as a seller, right? Do we want to buy in premium? Sorry, do we want to sell in premium or do we want to sell in discount? So I have a couple business people over here. Do you want to sell your item at a higher price or do you want to sell your item at a lower price? Exactly. So Tyler, you with your business, right? Do you want to sell your items at a higher price or at a lower price?
Higher price,
At a higher price. Why do you want to sell it at a higher price?
because I want to make as much as I can.
You want to make as much as you can. Now you may not be as greedy as the banks, right? The banks may just completely shoot the price out the window, right? While you are constrained by the laws of supply and demand and consumer dynamics, right? Banks are not tied to such laws. What are they tied to though? What laws do they have to follow? They have to follow liquidity. They can't just move price from A to B in an instant. They'd immediately get audited immediately, right? And they would get shut down. They can't afford that. So what are they going to do? So whenever we look at price, and this is more for the new people, there's more for the new people, right? There's something called a PD array, okay? And this is something that I want you guys to understand. And this is more for the people that are new, such as, is he still here? I don't think he's here. Oh no, he left. Well, we have a couple new students, right? And I actually wanted to talk to them about this. So the PD array essentially is this. Let's say you have a price swing, and this has nothing to do with point A to B. It's just, us being us, right? So let's say there's a price swing. There's consolidation here. There's price going back down, and there's stuff like that, right? Let's get rid of point B really quickly. Now, whenever you look at this, you'll realize that there's a swing low. Okay. You also realize that there's a swing high. Whoops. And because of this, you're going to need to realize something very, very important. Now, what is this important topic that I speak of? Well, you're going to realize that the laws of consumer dynamics and the laws of everything that is traditional in business do not exist here. However, premium and discount do. How? Well, very easily. If we take this and we find equilibrium. So for all the people that have studied econ out there, where is equilibrium in a graph like this? Where is equilibrium in a graph like this? %, perfect, right? Why? Because at that point, right, the supply, the demand, they meet at the middle, that's the 50%, right? So what is that going to mean for us as traders? Well, we're going to find, we can use a Fibonacci retracement, right? And we can find the 50% level. And that 50% level is not going to be just any random level. It's going to be our equilibrium level. Okay, and now what does this equilibrium level do? Well, essentially this creates a midline. This distinguishes between premium and discount, okay? Now what is premium and discount? Well, up here we have premium. Down here we have discount. So when we look at premium and discount, we want price to come up to this area to sell, and we want price to come down to this area to buy, correct? It wouldn't make sense. It wouldn't make sense for banks being giant heavy investors to sell right here, would it? No, by that point they've already missed a lot of the move. It wouldn't make sense for banks to buy up here, right? It wouldn't make sense for them to. Why? Because they've already missed a lot of the move. They're buying high and selling low. Literally, that's against every fiber in every trader's body, right? But what does this remind you of? What does this remind you of? Let me put a different scenario. Let me put a different scenario with the lines here. What does this remind you of? Let's say, let's get rid of premium up here. And let's say price breaks out of this zone. We're still in premium. What is retail going to do? Tell me, what is retail going to do at that point?
Buy.
They're going to buy, or they're going to wait for supposedly a break and retest, right? But considering what we just literally just said about price action and about institutional trading, where are we right now? In what zone? Are we in premium or are we in discount? We're in premium. Perfect. And since we're in premium, would we be buying there? Are we going to buy at a higher price than the equilibrium price? No, doesn't make sense to. So just based off of a, off of a numbers perspective, break and retest has no merit, does it? Break and retest has no merit because you're buying in premium. And since you're buying in premium, you're buying it at a higher price than your equilibrium price. Now, how can we tell, hey, price is going to go above the equilibrium price? Well, that goes into price action, right? That goes into your schematics. That goes into your liquidity. That goes into your order blocks. That goes into your remitigation blocks. That goes into all of that, right? So when it comes down to it, and a lot of people would also say, hey, this broke out, it retested, now it's going to continue back up, right? Well, no, not unless there's something here in this area pushing price in the upward direction. And as we know, price isn't going to do that. Why is it not going to do that? Well, because if it did do that, what would be left around here? What would be left? A lot of liquidity that they're going to have to come back and get. A lot of liquidity that they're going to have to come back and get. And if they don't come back and get it, what are they going to do? That's going to be the path of most resistance, right? And I know some people were having trouble with the path of least resistance, path of most resistance. Essentially, what the path of least resistance is what is the easiest or the cheapest path that banks can take? Now, what does that mean? Well, let's open a new slide before I go back to the A-B points that I was getting to with power of 3. But remember, these things, it may seem like I'm going on a tangent, but these things are very important for you to learn, right? So we learned premium and discount. So now how can you use it? Well, anytime that you see price, right, and you're looking at a range, whether it be on the 1 hour, whether it be on the 4, whether it be on the daily, right, whatever the case may be, and you're looking at a position where you would like to look at premium and discount, well, you're going to be looking at a certain swing point, right? Let's say the swing point is up here. Let's say the swing point is up here. And let's say the bottom swing point is up here, is down here, right? This can be from the normal, this can be, the normal price swings, whatever the case may be. Let's say price does this, and it comes back up, comes all the way up here, and then goes all the way down here back again, right? Mitigates, remitigates, Asia range, whatever the case may be. Now let's draw our equilibrium line. Let's draw our equilibrium line. And now what? Now we can tell, hey, where is our premium? Where's our discount? So here's our premium. Here's our discount. Where are we right now?
We're in discount.
We're in discount. So what are we going to be looking for?
Buy orders.
We're going to be, well, remember, so this is something that I'm glad you said, because I actually need to touch over this, right? So whenever you guys are trading, a big mistake that a lot of people fall into is this. People will say, hey, I'm in discount. I'm only looking for buys. Yes and no. And I'll tell you why. When you're in discount, you shouldn't be looking for sells because your sells should have been somewhere up here. Somewhere up here. There's probably a daily order block back here that was supporting this, right? You should not have been selling down here. You could have, for the sake of, the Asia range pips or whatever. You could have, but it's not necessary. That's unnecessary risk. So essentially, what premium and discount does is it mitigates a lot of risk that is, that is unnecessary. Because if you're selling down here in this area, it's a lot easier for you to get retraced on, isn't it? Because you're in discount. Banks are more motivated to buy in this position. Now, can they hold their swings from up here and let price completely barrel through discount? Absolutely. Absolutely. That's why you don't use premium and discount alone. They are a range finding tool. Okay. And what are range finding tools? Well, range finding tools are everything from your fibs to liquidity pools and to premium and discount. They fall into a category called range finders. Now, what are range finding tools? Well, essentially they tell you, hey, this is an area of interest, or hey, this is an area where your criteria is now safe, right? So whenever you're trading and you're using premium and discount, make sure that you are trading using premium and discount, but at the same time, make sure that you are being safe about it. So for example, let's say this trade shows no bullish points of interest anywhere here, right? There's no bullish points of interest, or there's no bullish points of interest. Are we going to buy?
No, because price doesn't just turn if there's nothing there.
Right, exactly. So price isn't just going to turn if there's nothing there, right? No piece of news is going to turn the market around on its ass in the middle of nowhere. No, there will always be a piece of price or a piece of movement that will originate a large move, okay? Which are the ones that we aim for. We don't aim for the small moves. We don't aim for the little retracement. We aim for the big moves because those are where banks get in, right? That's where the elephant actually steps into the pool. So as ICT would say it, right? So whenever we look at this and we now let's say right that there is an order block, right? Now let's say that there is an order block, and let's say it's right around this area right here, right? And our stop loss is back here. Now, what would premium and discount serve as? It would serve as a range finding tool, because now what can what can you find? Now you can say, hey, well, where's going to be my targets? Well, it at least has to come back up to equilibrium, right? Then after that, we have buy side liquidity, right? So we could possibly take that, right? Let's say we're on like the 30-minute, right? Up here could be our target, right? Up here could be our target, definitely. But you use premium and discount to your advantage because you spotted a piece of price that was remaining bullish, right? That there was an inspiration or a motivation for price to go up. However, you also distinguished that since you're in discount, banks are going to be more likely to buy. So now where are you going to have to come back up toward to actually sell again if this is a large institutionally sponsored move? Where are you going to have to go back to?
Premium.
Premium. Right, you're going to have to come back to either equilibrium and break past it, right? Or you're going to have to hit equilibrium and come back into discount, which is fine. Equilibrium is a point where you do want to keep into consideration its reaction, because what might be right here? Let me change the color. What might be right here? Liquidity, right? It maybe an order block. Right? Yeah, maybe an order block, maybe a breaker block, whatever the case may be, right? However structure may want to present itself, a remitigation play, right? Something like that. We could definitely have something like that in these positions. However, when you're looking at these structures, and when you're looking at price as it is right now, you want to keep it into in consideration that you are only using premium and discount as a confirmation. You're not using premium and discount as, some type of, holy, okay, it's a discount, no, I'm going to slap 20 lots on this buy and I'm going to ride it out all the way because it has to come back into premium. No, you use it as a range finding tool. Okay. And that's something that I want you guys to keep in mind. So does that make sense for everybody? Does that make sense? Perfect. 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 So the next part of this is going to be your actual point A to B, continuing on the power of 3, right? Oh, whoops. So if we continue on power of 3, what do we remember about power of 3? So there's accumulation of orders, right? Manipulation of price and distribution of profit. Perfect. Manipulation of price, right? And then what is the last one? The last one is distribution of profits. Make sure you guys have this in your notes because I'm going to remove this from the screen. Does everybody have this in their notes? Yep. Okay. Perfect. So what are we going to do after this? Your screen recording. You don't need a screen record. These are literally recorded. Yeah, that's cheating. I can kick you out. So if we go back to our analogy, we're at point A, right? Empire Bank is currently at point A, and they want to move price all the way to point B. What are they going to do? Remember, premiums up here. Discounts down here. And equilibrium is around here. Now, if we take a look at this, A is above equilibrium. It is. But is it deep? Not really. It's not really deep into premium. So if we look back to power of 3, what's the first step?
Accumulation of orders.
Accumulation of orders. Now, are they going to accumulate in sell positions first or buy positions first? Right. So what they're going to do is they're going to sacrifice their capital and they're going to push price deeper into premium. So they're going to buy here. So Empire just bought, let's say 700 million lots. And you see where this ties into bank logic? You see where all of this ties into bank logic? A lot of people don't see where these two things tie in, but here you go. Right? So let's say you go back in and you say, all right, let's say you buy 700 million lots. Right, 700 million lots. So then after that, what do you do? What is price going to do at this point?
It's gonna go up.
Going to go up. Going to create sell side liquidity. you're going to create this distribution because it's nice like that. Now, when we put in these 700 million lots, what did we also need to place?
Sells.
Right, we also needed to place cells. So what's in drawdown right now?
Your sales are in drawdown.
Your cells are in drawdown. Since your cells are in drawdown, what are we going to do? What are banks going to need to do?
Mitigate those sales.
Mitigate the cells, right? They need to mitigate the cells. Now, not only that, that is accumulation of positions. Why is this accumulation of positions? And I have a little caveat, like right beside where I say accumulation of positions. I also say sacrifice of capital. So if you want to add a little star, you can say sacrifice of capital, like that, right? Okay, so you can add that to the first step. Now, since they're sacrificing their capital to go all the way up, what are they going to do up there? What is this called? Accumulation of positions and what? What did they do to price?
They manipulated it.
Ah, they manipulated it. Now, when they manipulated price, what is their goal? What is their goal for manipulating price? To accumulate what?
Liquidity.
Okay, not only liquidity. What else? What are they accumulating specifically?
Orders.
Ah, orders. They're going to market extremes. They're stocking up on sells. They're sacrificing their capital to push price higher so that they can get higher entries on the sells. The same thing happens with stocks. The same thing happens with commodities. The same thing happens with everything else. It's the same thing. Okay? Because banks, large investors, they're going to sacrifice their capital to shoot it all the way back up if they want to short. And they're going to sacrifice their capital and take profit, right? And push price all the way back down so that they can get cheaper entries into the stock that they want. And when it shoots, well, I got entries all the way down here, says the large investor. Meanwhile, the baby investor, the one that's still on Robinhood, is crying because they took profit before the 20% increase. Well, why? Because they don't know how to trade. But luckily, you do. So you here, right? What are you going to be doing? Well, you're going to realize that this is the accumulation of positions. So this is 1. This here is 2. Now, 1 has 2 parts. Part 1 of power of 3 has 2 parts. It has both accumulation of positions in terms of buy and sacrificing of capital. But what types of positions are they also accumulating? Well, as we discussed earlier, they are also accumulating sell positions. So sell position, sell position, sell position, sell position, sell position, sell position, sell, sell, sell. But they also need to stack up on buys, right? Buy, 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 buy. A lot of buys, right? A lot of buys. Little buys, baby buys, baby buys. But what are they stocking up on? They're stocking up on sell positions. They're putting in a shit ton of sell positions. What are they putting in a shit ton of sell positions? Well, easily, because where are they targeting price? All the way down here. If you knew that price is going all the way down there, what lot size are you slapping on your account? Let's think about this from a retail trader's perspective. If you as a trader know that price is going from where price is right now to point B, and you know it for a certainty, you know God himself came down and told you, what lot size are you putting on your account?
As big as you can.
As big as you can. You're going to beg your broker for more margin, right? You're going to put your house on it. Exactly, right? You're going to put everything that you possibly can. My mom's church money. He's like, you're gonna put everything, right? Why? Because you know that price is going all the way down there. Now, who runs the market?
The banks.
Oh, the banks. So why wouldn't they slap a shit ton of lot sizes? Why wouldn't they? Is there any reason they wouldn't? Are they good people? Not really. Do they want to be nice to us and let us keep our little accounts? No, they don't care about our little accounts. They care about getting their money. Big ups to them, right? So now, the mitigation of positions I explained last class that I did at least with bank orders, right? I explained how distribution mitigates a lot of these buy orders, so I won't go over it again. If you guys want to see that class, make sure you guys are looking in the hex, not hex, sorry, and the Empower, I can't speak, and the Empire Trading Academy, as well as on the website. Make sure you guys are looking on there as well. One more thing is this distribution is meant to counteract and bounce off all of these positions in which price accumulates buys but also accumulates sells, and I explained that in detail in that class. So moving on, we know that price is going to mitigate back up here. Then what's it going to do? Well, it's going to be nice to us and it's going to drop, and then it's going to come back down here, and then it's going to do this, and oh my goodness, we just sold all the way down to here, right? And target has been achieved. Now, since this target has been achieved, where are we now?
We're in discount.
We're in discount, right? We're in discount. Does that mean we buy? Does discount mean buy?
No, look for point of interest.
Exactly. It does not mean buy. It means look for something to buy. Right? It means look, is there something to buy here? No. Or it's kind of like window shopping, right? Window shop. Are you looking for a buy right now? Yes, we're looking for buys. Is there something to buy here? No. Okay, then leave the store. Okay, so that's the same mentality you should go into a trade. Is there anything to trade here? No. Do I not like it? Okay, there's 32 other pairs you can trade plus commodities. So don't stress yourself out over one pair. Right? So that's something that's very, very important between you guys. So that's something that's going to help you out with your mentality, right? Now, let's go back and look at the positions that banks put in. So they accumulated more positions, more positions, more positions. They accumulated some buy positions to mitigate them out. But look at where all the buy positions are, and look at where all the sell positions are. Which ones can they close and which ones can they leave running? Every single time. These are all mini power of threes. Okay, so I guess I'm gonna answer my own question. So what's gonna happen is, oh, Robert answered it. Okay, but perfect. So exactly, you close the buys and you leave the sells open. So why put the buys there in the first place? Well, banks are greedy. I don't think I should be the one to tell you that. Banks are greedy. So what are they gonna do? They're gonna distribute profits, which is what? Part 3. Oh, what is this known as? Buyer powers combined. Power of 3. Ta-da! Right, power of 3 has now been shown to you, and now your mind has been opened. Thank you, ICT. You are the best. Right? Now, what does this mean? Well, every single time that you as a trader see the market push back up is because banks either took profit, right? They either took profit or they allowed their own broker, right, their own positions to be hedged, and they buy that position all the way back up to a previous high. right? And if we would fib this from here to here, we would get around the 79% retracement, which is also known as optimal trade entry. Or we may get the 88.6, which is also our kill zone, right? Now, why would they do that? Well, they don't want any of their sell orders going into drawdown, so obviously they're not going all the way up to 1%, right? They're not going all the way back up to 1%, which is up here, right? They don't want to go all the way back up to 1%. What are they going to do? They're going to stick to the 79. They're going to stick to the 88.6 because the market prefers extremes, right? And since the market prefers extremes, they're going to want to go to those extreme levels. They're rarely going to stick to the 62%, to the 50%, to the 27%, to the 32%. Those are bullshit. I'm going to say it straight up. Because a lot of times retail traders will say, "Oh, it reached the 61.8 retracement. I can get in again." And then they go into 70 pips of drawdown and ask themselves, "Well, why?" Then they get stopped out and it goes their way. Why? Well, exactly for the reason that I just said. Banks love extremes. Since banks love extremes, what are they going to be doing? They're going to allow price. They're going to allow price to distribute, right? And they're going to allow themselves to first accumulate positions, manipulate price, and then distribute their profit. All of this that you just saw up here in this diagram, all of that you just saw in this diagram can be applied microscopically right here. It's the same exact thing. It's the same exact thing. Banks are going to do the exact same thing. Now, why am I telling you this? Why are you learning about power of three in a call that's supposed to be about Asian range and kill zones? Well, I'm glad you asked. Because if you don't know, but if you see power of three, do you think this happened from Monday? You think this happened from Monday to Wednesday? No. This took at least a week, if not more than a couple weeks, right? So now here's where some sauce that you guys may want to have on your notebooks comes in. Whenever you trade, you want to distinguish, right, your Sunday, your Monday, your Tuesday, your Wednesday, Thursday, and Friday. Okay, and that's the weekend, so we're going to double dash it. Right, so now when we look at this, here's something that I would like for you guys to see. Where is the middle of the week? Between what 2 days?
Tuesday and Wednesday.
Tuesday and Wednesday. Now, Tuesday and Wednesday are very important. Why are they very important? For this very simple reason. Tuesday and Wednesday are very important because of this. Well, let's look at this. This splits the week literally in half. Okay. So if we're going to accumulate positions, we're going to sacrifice capital to get from point A to point B. What are we going to have to do? We're going to have to at least spend a couple of days accumulating positions, because it's not going to take banks 24 hours to accumulate enough money to push price all the way up here, then push it all the way down there, right? No, that's not what's going to happen. So usually, and this is something that I'm going to give you guys for your notes, okay? Usually, get rid of these two. Usually, by Tuesday, you will have the high or the low of the week. Okay, usually by Tuesday London. Usually by Tuesday London. Obviously depending on whether your market has a bearish or a bullish market outlook. Now, does this mean trend lines? Swear to God, if you guys see the wrong answer, I'm going to end this call. Does this mean trend lines? Does this mean what trend we're in?
Trend lines are a myth.
Exactly. Trend lines are a myth. I swear to God, you're making me mad. Right? No, exactly. Not at all. What does it mean? It means, is there more liquidity towards the sell side? Is there more liquidity towards the buy side? Live and die by the line. Exactly, right? So you hold the line. So what's going to happen? If you see, okay, well, there's a lot of sell side liquidity, so my market outlook is bearish. Oh, okay. So what are you going to expect? Are you going to expect the low of the week or the high of the week by Tuesday? The high of the week. Perfect. So you're going to expect the high of the week by Tuesday. By Tuesday's London session, you should have had the high of the week. Now, sometimes on Wednesday, the market gets wacky and it blows past the high of the week. But by that point, by Wednesday, New York time, you should have had your high of the week. All right. So this is about a 90% accuracy. So around 90% of the time, you will have your high of the week or low of the week by Tuesday London session. Now, this is also known as a midweek reversal. Now, why is this known as a midweek reversal? Because what day do you guys think I trade most? What 2 days do you guys think I trade most? Tuesday, Wednesday, Wednesday, Thursday. I'll give you one of them. One of them's Wednesday. Friday till 2. Friday till 2 is my cutoff. So a lot of times I trade a lot on Mondays. Not even going to lie with you. Because if they have to accumulate price from here to here, they're going to have to make some move here, which is at least 200 pips, right? At least 200 pips. So why not catch it? I know the market's going to reverse, but why not catch it? Right? So I like trading Monday, but my favorite day to trade, my favorite days to trade will be Wednesday and Thursday. Now, why do you wait so long to get to the end of the week? Well, very easily, because if you ask me that, you don't know what you're doing. Very simply, if I'm catching the midweek reversal and it made the high of the week, wouldn't it make sense for me to get in at the high of the week and then ride it all the way down? Find re-entries on the way down? Look at other pairs that, are similar or run correlating with that pair and find their high of the week too. And then catch the whole, move of like 400 pips all the way back down to point B. Wouldn't that make sense? Wouldn't it make sense to ride it all the way up with the manipulation of banks, catch the high of the week, and come back down to the point B where they want to end the week off at? Or even have running positions. Let's say this takes more than a week. Let's say this takes a month. Like, for example, AUD NZD. AUD NZD, I held it for like a month and I ended up coming out with a lot of profit. Why? Well, because I held it for like a month, right? And it ended up running like 450 pips. Well, perfect. But I caught it from the high of the week, right? Because a lot of times, and you guys can go back test this in any pair that you'd like, you'll see this wherever you go, really. You'll realize that by Tuesday London session, you will have your high or low of the week. Usually by that point, the market will reverse. Now, does this mean, okay, AU is going upward? It is Wednesday, my dudes. I am now going to sell? No. This means find a piece of price that is most likely to reverse it and see whether or not that would have been an accumulation of positions, manipulation of price, to begin or trigger a distribution of profit. Now, we've discussed the days within the week, but what about, we've discussed the kill zones within the week. Now, what about the days within the week? What about the hours within the days? What about those? Right? Those are very easy. Those are very, very easy. They're very simple. And I'm going to give them to you very, very quickly and very simply because they are very elementary, okay? So let's say we have New York session. So let's say you're a New York trader. Let's say you're a New York trader. And I've actually invented another schedule with the help of Saucy. He helped me out with this. So let's say we have New York. New York, usually in my personal opinion, starts around 6 a.m. Eastern. Does this actually start around 6 Eastern? No. It starts more around 8. Okay, it starts more around 8 Eastern. However, London, New York crossover volatility is so juicy, you don't want to miss it. It's amazing because you get to watch your trades go so blue that you get seasick. Okay, it's amazing. So for me, if you're an early bird, 6 a.m. If you're not an early bird, 8 p.m., 8 a.m. the latest. 8 a.m. the latest. Okay. Now, when does this reach all the way toward? You really should be done by 11 p.m. You should be done by 11 p.m. That's better than any 9 to 5. Right? That's better than any 9 to 5. If you're done by, oh no, wait, what? Not 11 p.m. What the hell? 11 a.m. I was about to say. 11 a.m., right? You should be done by 11 a.m. If you finish working when the clock hasn't even hit lunchtime, don't you think you're doing something right? Well, yeah, you're doing something right. Let's say that you get to the point where you're FTMO funded, or let's say you get to the point where Empire has opened its wealth management fund, and you have become a vetted trader for Empire, and you get to manage an $100,000 investor account. What does this mean? Well, you're gonna have to wake up at 6 a.m. and you're gonna finish working by 11 a.m. and then the rest of the day is yours to do whatever the hell you want with it. Doesn't that sound nice? Now, here's something else that we have. Let's say you're in PST and you prefer London. So let's make a little divider here. Let's say that you prefer London. Okay, well, you're one of those weird people that prefer London. And I'm just messing with you because since I like literally don't sleep, I trade all sessions. So let's say you like London. You're weird. So let's say you like London, right? I should not have to explain what pairs move in these sessions. You already know this. I already went over this. Okay. I'm not gonna go over it again. That's gonna literally blow my mind. So what happens here? London, right? Your kill zones is going to be pre-London, right? And it's going to be your actual London volatility. So when does London actually start? London actually starts around 3 a.m. Eastern. And it lasts all the way to, I think, 12 p.m. Eastern. Does this matter? No, not really. Why? Because the volatility within London is really going to be, you're going to have 2 sessions for me for London, right? So you're going to have pre-London, which is 2 a.m. to around 4 a.m. Okay, and then you're going to have your volatility, which coincidentally begins at 6 a.m. and usually ends around 9 a.m. Okay, so from 6 a.m. to 9 a.m., what 2 sessions overlap?
London, New York.
London, New York. The 2 sessions that are most volatile overlap. What do you think is going to be the result of that?
Crazy volatility.
Crazy, like insane volatility, right? So this is where you see pairs go 130 pips in an hour, right? This is where you see gold make its move like it's on crack, right? That's exactly what you're going to see during these times. So when I called that buy on gold that literally went for like 390 pips in like half an hour, it was at 6:15 a.m. I was up at 6:15 a.m. I flipped over to gold. I looked at it. I said, "Oh my goodness!" And then I called the buy limit. 10 minutes later, I hear a giant ding that breaks my eardrums because I'm still half asleep. And I look, and my buy limit for gold is triggered. Why does this happen? Because of the volatility crossover. Okay. Our job is not to know why. Our job is simply to abuse it. So from there, that is what you want to be doing. What you can do, and what I've seen a lot of people do, is you can go to sleep early. Let's say you're on the East Coast, whatever. Right? You can go to sleep around 10. You can wake up at 2. You can trade from 2 to 4. You can sleep from 4 to 6. And then from 6 and on, you can trade. That's what I used to do because I don't have a sleep schedule. However, that is very unhealthy. So what you can do is if you want to stay up for London, or you say, I'm in PST, I'm better suited for London, that's completely fine. You can do that, and you can take London, and you can say, okay, well, I am going to take London for myself, and I'm going to trade London. Perfectly fine. However, you should be ready to trade from 2 to 4 and from 6 to 9. Okay. So you should be ready for that. All right. However, London has its perks, right? Because you can, London literally will not like reverse halfway. London, if it's going in one direction, it will go that direction until New York. It will literally just shoot in that direction until New York. Now, when New York happens, sometimes we see a London New York reversal, right? In which London pushes price or accumulates positions, manipulates price into into a New York kill zone, right? And then that New York kill zone ends up being the thing that inspires price to going into a certain direction. So let's say that London starts right here. Let's say that London starts right here, right? And for London, GU buys 75, 100 pips. Now up here, there's an order block, and cuckoo, the time hits 6 a.m. Oh well, New York is starting consolidation, and then New York starts. Boom. Okay, that's what happens in New York. What happens here? What is this called? This should be very easy. We just went over this for like an hour.
Power of 3.
Power of 3. Power of trace, right? Perfect. So what do we see there? Well, we see that London manipulated price into a New York kill zone. New York made the actual move. Okay, that does happen quite a bit. So keep an eye out for that. That may help you out in your trades. Now, here comes the session that we all love because it moves so much, right? It's so exciting. It's my favorite session. Asia. Yoo-hoo. Hee. It's Asia.
Your sarcasm is on point.
Yeah, everybody loves Asia. So when does this start? This starts at 6 p.m. Eastern, and this goes also. Okay, so at the top, I'm telling you when it actually goes for, right? So it goes from 6 p.m. to 3 a.m. Are you going to be trading Asia this whole time? Absolutely not, right? So what are you going to do? You're going to trade Asia. You don't even have to be looking at your charts from 6 to like 8:30. Okay, so you can get back on your charts at around 8:30. Let's say 8, just for timeliness sake. Let's say we're very organized and we want to go and look at our charts around 8. That's fine. Right, so what are we going to do afterward? Well, we're going to say, hey, we're going to go from 8 to around midnight. You can also make this toward 11-ish. That's completely fine. And then let volatility take over. By this time, you with your trained eyes should have seen some point of interest. Some. I don't care how new of a trader you are to smart money. When you learn smart money, it is not hard to find a point of interest. It's not hard. It's not hard. You should not need 3 hours to distinguish price points for all 30 pairs. you should not need 3 hours. You should need maximum 1, right? Because it doesn't take that long to do it. Now, if you're talking to your mentor about it, if you're talking to your buddy about it, then it may take a little bit longer. That's why I put the extended period of time. And you may also say, hey, okay, I see this point of interest, but I'm not so sure. I want to wait for price to actually, come up to it, and then I'm going to look at my lower time frames. Perfectly fine. You can do whatever you'd like in that case, right? You can do whatever you'd like as long as you're taking the trade and you're catching those pips. So from there, that is when Asia range forms from around 6 to around midnight, right? So when does Asia range actually form? The range actually forms from around 6 to around midnight. Right, so it forms from 6 to around midnight. So that's perfectly fine, right? That's what we want to see. That's what we like to do. Now, from there, the range is what we're going to be using later on. However, I really don't like Asia range. It's very good. Don't take me wrong. Like, it's very good. I just personally don't use it. So I'm probably going to leave that for Garrison for another call. However, I wanted to go over this because when it comes to these volatile points, there's also some people that say, hey, I really don't have time, bro. Like, I really do not. I don't have time. What am I going to do? Like how am I going to be profitable if I can't stay up from 2 to 4 and if I can't get up at 6 a.m. because I'm tired? Well, I understand that because that used to be me. So what are you going to be using? Well, you're going to be using something that, please don't copyright us, but Sasi called it the Byakugan. Now, this is a reference to a show. We're not going to mention said show, but what we're going to do is we're going to say, well, what are we going to do with this session? Well, what you can do is you can mark up during Asia, which everybody should be awake for, right? Asia. You can mark up. You can find the point of interest. And you can set limits. You can set limits, right? So let's say, for example, with Eurochef, right? With Eurochef, we had a wick, which was an inefficiency. We took the 50%. I took a little bit lower than the 50% because I don't like to miss because of accuracy. What happened? I left the limit. It went up like that, and then it shut down 40 pips. I didn't need to be awake for that trade. I could have just said it, and I could have forgotten it, right? So what can you do as a trader? Well, you don't want to stick to pairs that you may say, like if you have to say, well, I may have to be awake to actually see the entry on this pair, don't take it. Leave it. There's another pair out there that is approaching an order block, that is approaching a breaker block, that is approaching some sort of liquidity point, that's approaching an inefficiency, that's approaching something, that's making a schematic, whatever, right? It's doing something other than just sitting there. Right? So as I said, if there's nothing to shop, leave the store. However, if you want to come back and you want to use this style, you're going to be seen as, as a super sniper because you're like, what? You're going to be like, what? Well, why? Why do you use this? Very simply, if you do not have time, you use limits. Why? Because you don't have to be using them. You don't have to be constantly looking at them. You don't have to use any alerts. You don't have to use anything like that. All that literally you're going to be doing is you're going to be taking Asia range or Asia, right? And you're going to say, hey, what are my points of interest? Right. You're gonna wait for Asia close. So let's say you're at around 10:30, 10 p.m. Right. Let's say at around 11 p.m. You're saying, okay, well, I'm about to go to sleep. I see pairs doing this, this, and this. Perfectly fine. You can also you can literally just take what you see at around 11 p.m. You can transfer them over to limits, and you can go to sleep. Why? Well, simply because by that point, price should be showing you where it's going. More than likely. More than likely. More than likely. Literally. You know, more than likely what's going to happen is you as a trader should be able to see where price is going to be going that day or the rest of that week because of price structure, right? That's what you should be looking at, what you should be seeing, right? So if there's an obvious order block on GA, right, you're going to set your limit there. You're going to set your limit there. And then let's say GA comes back down here. It sets it off and then it comes back up. Did you have to look for anything other than your limit? No. Did you have to be awake for this trade? No. That is the power of this schedule that I have, right? The Byakugan. Now, why do I like it and why do I personally use it? I personally use it because I'm a little bit more experienced than some of you. And because of the simple fact that I, as a student, do not want to wake up at 6 in the morning. And you know, the reason why I don't want to be waking up at 6 in the morning is because usually I stay up until 2, 3 in the morning finishing work. Okay. And I know that a lot of people have a lot of busy lives. For example, my dad just drove 4 hours to the beach to go to work. And then he had to drive back another 4 hours. And then he slept for 3 hours and then he had to go back to work. Well, he got 3 hours of sleep. Do you think he wants to stay up for London that day? No. Do you think he wants to wake up for New York that day? Absolutely not, right? So what is he going to do? When he gets home, when he's eating, you know, or when he's done eating, when he's about to go to bed, he's going to mark up Asia. He's going to use the Byakugan. And what is he going to do? He's going to see 360 degrees and he's going to say, well, I see where price is going. I'm going to set my limit. I'm going to be lenient with my risk because I'm not going to be awake. Right? Since I'm not going to be awake, I'm not going to try to get lucky and have a 1.3 pip stop loss, right? What are you going to do? You're going to set your limit and you're going to be lenient with your risk. You're going to be smart about your lot size because you're at a disadvantage considering that you can't watch your trade, right? But because of these eyes that you've been given, you're going to be able to snipe limits like nobody's business because you know what you're looking for. Now, Tyler, what time do you wake up if you don't mind me asking? Like to go to work for your business?
I usually get up about 7, sometimes
About
6.
7? 6, 7-ish, right? And by that point, you're getting dressed, you're getting ready to go to work, you're in no mood to really be marking up. Now, what if you had already marked up the night before and you look at your phone and you see 2 limits have been triggered, 1 hit stop loss, and then the other 2 are in profit, and then you have 2 that are waiting to get hit, right? So right now, let's say you're running 50 pips and 70 pips respectively, and you lost a total of 12 pips, right? And you're waiting on another 2 moves that will activate in, let's say, in about an hour. You don't know this, but you're going to see this in an hour, right? Isn't this a lot easier than having to wake up at 6, boot up your computer, having to look at charts, stare at them, and try to figure it out while you still half asleep?
Absolutely.
That's what I want to transition everybody to be using. I want everybody to gain these eyes, because while it's very fun to be talking and texting with you guys at 3 in the morning, I've been doing this for about 4 years now, and it's tiring. It gets tiring. Staying up until 3 in the morning is tiring, and then trading it after 3 in the morning all the way to 4, 5, 6, 7 because you can't sleep. Now you've lost sleep. Oh well, might as well pull an all-nighter. And by then your sleep schedule is completely destroyed. Right? So that's exactly what I don't want you guys to use. So I want you guys to use this schedule. At least try it. Try it. Right? Try it. If you don't like it, okay. If you're more of a, hey, I want to live trade it, all right, fine. Go ahead and use it. But I'm trying to be more convenient for y'all. I developed this so this could be a little bit more convenient for you guys. So for example, Ladarian. Ladarian and he's been a student for a while, and he's always been very, very studious, but he works in a very unique job where he's away, right? And he's not at his where he's not at his phone, or the Wi-Fi doesn't really work all that well. So what is he gonna do? I developed this for people like him because I was like, okay, well, If I teach them how to use their limits correctly, and I teach them what sessions to actually be using them in, with the work of power of 3, knowing that you're manipulating price into a certain position, high of low of the week, by Tuesday, he's going to be more conscious. And what is he going to do? He's going to say, well, Monday, I don't need to trade. Tuesday, I'm going to be looking at the charts, but I don't need to trade. Wednesday, I catch 3, 4, 5 good trades. I'm set for the week. And does he need to trade? Does he need to get 1,700 pips? No, he doesn't really need to, right? If he manages his risk well, and he looks at his limits and analyzes his limits well, and he takes high probability setups, he's going to be up and he's going to be compounding his account. Okay, so that little $300 account is going to go to 200. Sorry, not to 200. That I was thinking 100. That little $300 account is going to go to 500, 500 to 700, 700 to 800 to 1,000. What can you do with an extra 1,000? Right, 1,000 to 2,000, 2,000 to 3,000 over the course of a certain amount of months, weeks, days. Because he's using this system. Now, is this high stress? No, it's not high stress. Now, this is for people that are busy. If you want to trade every day, that's fine as well. You'll still be able to use this, but you will be using it a little bit more sporadically. Let's say you're tired one day. Okay, that's fine. I'm going to take this, I'm going to use the Byakugan, and I'm going to say, all right, cool. I'm going to take this and I'm going to trade now, right? I'm going to trade now at Asia. Now, I'm not going to trade during, I'm not going to wake up early, and I'm not going to trade during New York, and I'm not going to trade during London. I'm going to stay up. So I'm just going to trade during Asia. I'm going to use the Byakugan today, and I'm going to say, okay, perfect. I'm going to set these limits. I'm going to wake up in the morning, and if I know I feel a lot more refreshed the next day, then I'll stay up for London. Perfectly fine. This is to be an alternative for you guys, because I know that trading gets tiring, and I know that trading gets, you can get burnt out very easily, especially if you're somebody that's trying to learn it, that you're trying to master it. Yeah, you're going to get tired. You're going to get very burnt out. So that's something that you should be trying to use. Try to use this system only using limits. If you only use limits, I promise you, this will help you out a lot. It'll help you out a lot, because you'll actually understand, firstly, how to use your limits. Second, you'll get a lot of experience with it. If you see a lot of our signals, what are they? Are they market executes? No, they're limits. A lot of our signals are limits. A lot of our signals are limits for a reason, because we use this. And yes, we're up. We're up talking to you guys, but we're up because we want to explain to you guys why we took said trades. We want to try to get as little drawdown as we can for you guys, because you guys are our most important priority. However, we could just set our limits and go to sleep, and then be like, oh, well, let them figure out why we took them. But we don't do that. But you can. You're not an educator yet. You can do it. You can use this strategy, and you can say, okay, well, I'm going to use this. I'm going to go to sleep. Good night. I'll see you guys. I'll see you ladies tomorrow, right? And who can blame you? Absolutely nobody. But it's going to be more effective to you. Sometimes I feel like I'm a slave to the charts, only having to see what's going on. Setting buy and sell limits would be awesome. No problem, bro. This here is something that I've been developing for a second. I've been trying to perfect it, because if we look at it, right, and if we look at it from a perspective of actually looking, from a chart, right here, right here. Let's say we're looking at GA on the 1 hour, right? Let's say we're looking at GA on the 1 hour. Now we have our order block, right? We have our order block. So we have our position right here, right? Let's say you're using the Byakugan today, right? Let's say you're using the Byakugan today. Now, let's say at this position, you say, okay, well, there's something right here, but there is a lot of sell-side liquidity here. There's an order block that hasn't been tapped yet. Order flow definitely does show bearish order flow up until this position, which there's a large order block in which I can take a buy off of. Perfect. So you can say, all right, well, what would be my target? Well, your liquidity targeting would immediately say, well, up here would be your first, liquidity targeting. This would be your second, right? And up here would be your third. So then what are you saying? Well, you'd be looking for bullish order flow, right? You have your consolidation, you have your buy side, sorry, your sell side liquidity. You took your buy side liquidity after. So where are you going to return toward? Most likely you're going to return towards the place where this sell side liquidity was taken, and then shoot back up to take all of this buy side liquidity. So now that you've analyzed it, and also if we look at this, what does this become? Completion of a cycle. Right, we broke these equal lows, so we took all the sell side liquidity. So is there sell side liquidity below? Not really. What is there? Where is all of our liquidity pointing toward? Bullish, right? It's pointing towards this buy side liquidity. So from here, if you're using the Byakugan, you can say, okay, well, I'm going to set it up here. I'm going to set my limit around there. I'm going to put my stop loss around 50%, 30 pips. And then from there you can say, and keep in mind this is GA, being GA is extremely pip heavy, so please be careful with GA. So you're going to say, all right, so I'm going to set my position right here. Now, like I said, this isn't going to give you the 1 to 100 risk reward. This is meant for you to go to sleep and forget about it, right? Now let's see what happens. You're using the Byakugan. What time is it right now? It's around 4 p.m. Eastern time, right? So you're trading, you're marking up during Asia, and you're saying, oh, well, okay, I'm going to use the Byakugan today. I don't feel well, and I'm going to take a buy off of this position. Now let's see what happens. So your limit is activated, and you wake up with, let's say you wake up the next morning at around 9 p.m. at around 9 a.m. So you wake up with what? You wake up with around 182 pips. Let's say you go around the rest of the day, and let's say you take profit around take profit 1. You close with about 200 pips. 200 pips in the span of a day. So you went to sleep. This limit triggered. Went all the way up. You completed the rest of your day. And by the afternoon, you had closed 200 pips. Okay, so that is what you can be using, right? That is something that you can be using. It's something that I don't want you guys to just limit yourselves to simply, like, oh, I have to stare at the chart all the time. No, that's definitely not something you want to do at all, right? Now the same thing, and this isn't just one simple. This isn't just one isolated incident. This happens a lot. So let's say right here for GCHF, let's say we want to limit our risk to 20 pips. Perfectly fine. Where else would be our second entry? You can place multiple entries here too, because let's say one of them misses, you won't be awake to actually get the second one. So you can set multiple limits at half lots, which is perfectly fine. Let me just place that over there, right? And then your order block's up here. Your order block's up here. So let's say your order block, you take this order block. So you give it around 20 pips. Then you want to take all the sell side liquidity. Perfect. So now you have 2 entries. So one of them gets hit, the next one gets triggered a couple pips up, and then you have another risk, right? Which is perfectly fine. But at the same time, if your analysis is correct, you're going to have a lot of positioning that you will be able to use and abuse, right? Now, if we're looking at this from a perspective of, what are we trading? Where is this going to bounce off of? Most likely this 1 hour order block, then it's going to come back up and take this liquidity, and then from there fall. So we have 2 points of interest. We have this point of interest, and we have this point of interest, both of which are perfectly fine. However, we want to make sure that we manage our risk correctly, okay? We're going to make sure that we want to manage our risk correctly. So, yeah, guys, I think, does anybody have any questions that you guys would like to ask me? Any questions that you guys would like to ask me?
We love you.
Thank you. I appreciate it. What am I studying? What am I studying in school? I'm studying international business. I don't know why. I just am. Mostly for the connections.
Yes, sir. Network marketing.
What about you, Mark? You said not really a question, but oh, okay. You're saying you need to get on this. Okay. Yeah, I appreciate that, Jason. Does anybody have something that you guys want to clarify? Yes, Jason. I'm doing international business. Either international business or something similar. Maybe. Well, see, look, I was thinking, and I was saying, well, maybe I could become a hedge fund manager, but then they literally will never let me like make my own institutional trading course or company or platform. So I'm literally gonna have to resign from Empire, and that's like, ugh, I don't want to do that. So I might as well just grow Empire as big as it can go. Any questions that you guys want to establish, talk about, anything like that? Anything that may be bothering you? Any questions about your accounts? About what's going to happen with Empire? Anything like that?
I see us growing, and I feel like I'm learning from a Jedi Master. So we thank you. We appreciate you.
Thank you, bro. I appreciate it. I appreciate it. Make sure you guys keep coming to these classes.
Yeah, I gotta say, I've been doing Forex for about a year, and I think I've learned more in the last 3 weeks than I have in a year. So I appreciate all your help.
Yeah,
I
no
can
problem,
agree.
man. No problem, bro. No problem, guys. I hope these classes help you as much as possible, and make sure that you guys use and abuse us, because we're here for your service. We're here for you guys to help you guys, and yeah, well, we have a lot of news that are going to be coming out in the next couple of days, so make sure you guys are alert and cooperative. But apart from that, if that's about it, I think, well, I'm going to go ahead and sign off. Do you guys want me to do, so Zay's not going to do a Midnight Millions. Do you guys want me to do a chart up session?
Yeah, that'd be great. That was probably my next
Yeah,
concern.
good,
Yeah, just watching you kind of think through it.
Okay. Jonathan, where can you schedule a one-on-one? Go to the channel that literally says one-on-one schedules, and tell me when you're free, and I'll tell you when I'm free. Because of school and because we're coming up on exams, it's gonna be a little bit tight, but I'll definitely be more than glad to help you. So the charting session is going to be up next. I'm going to stream it really quickly. I'm going to cut off this recording, and then I will stream a new link for you guys to get on. So I appreciate you guys getting on, and that's it for the recording today. Appreciate
James, real
you.
quick, I have a question.
Go ahead.
So I still need to switch brokers to Eagle FX. Can I do that real quick before we start that? If that's okay.
Yeah, sure.